Hello everyone, I'm April McKenzie, Chief Executive of the External Reporting Board. I'm hoping I'll see Michelle Embling, the Chair of the External Reporting Board, pop up on the screen in a second, and I will be able to hand over to her for introductions. Here we go. Welcome, Michelle, over to you.
Thanks, April. Ina mana ina reo ira rangatira mā, nā mihi mana hau kia koutou. KXRB ahau I mahi ana, ko Michelle Embling ahau, tēnā koutou, tēnā koutou, tēnā koutou katoa. Leadership, vision and foresight are the key words for today's launch. Mandatory climate-related disclosures are a vital tool to focus business leaders and investor attention on the risks and opportunities arising from climate change. Today's launch is an important milestone in the XRB's mahi to enable more informed decision-making through clear, relevant, comparable, comprehensive and high-quality information. In the year since the government announced its intentions to introduce mandatory disclosures, the XRB has pivoted, upskilled and delivered. We said at the outset we would develop the disclosure standards iteratively. This launch of the first draft section is proof of that. We also said we'd be consultative. The fact that 800 people registered for this launch is evidence of the broad engagement we've undertaken in the past 12 months and will continue to do so. I'd like to acknowledge both the Minister of Commerce and Consumer Affairs, the Honourable Dr. David Clark, and the Minister for Climate Change, the Honourable James Shaw, for their leadership, vision and foresight in driving forward the empowering legislation that will enable mandatory climate-related disclosures for Aotearoa New Zealand. I'm delighted now to welcome the Minister responsible for sponsoring this important legislation, the Honourable Dr. David Clark, the Minister of Commerce and Consumer Affairs, Minister for the Digital Economy and Communications, Minister for State-Owned Enterprises, Minister of Statistics, and the Minister responsible for the Earthquake Commission. Minister Clark.
E ngā mana, e ngā reo, e ngā karangatanga maha o te wā, tēnā koutou, tēnā tātou katoa. Ki ngā mana whenua, ko te atiawa, ko Ngāti Toa anu nei aku mihi ki a koutou. Noku te hana rei ki haere mai ki te whakanuia tēnei huhunga whakahirihira. Nō reira, ngā manaakitanga ki runga I a tātou katoa, tēnā koutou, huri noa I te whare, tēnā rā tātou katoa. Let me begin by saying how genuinely delighted I am to be speaking at today's launch for the proposed climate-related disclosure reporting standards. Only last night I was on my feet in the House, as was Minister Shaw, who will be speaking shortly, ushering the financial sector climate-related disclosures and other matters amendment bill through the committee stage. I want to give a big thanks at the outset to the wider External Reporting Board and its chair, Michelle Embling. Thank you for your introduction and thank you for playing host to this digital event. And I'd also like to acknowledge the 300 odd and still growing, I think, number of attendees who are tuning in to this hui from various parts of the country. Start with a bit of context. This consultation launch is an important step towards implementing the changes to be introduced by the Climate-Related Disclosures Bill. The bill plays a key role in the government's commitment to addressing climate change and will make a significant contribution to achieving New Zealand's goal of carbon neutrality by 2050. Trillions of dollars will be needed to be invested globally to achieve the Paris Agreement goal of keeping the increase in global average temperatures to well below 2 degrees Celsius of pre-industrial levels, and to pursue efforts to limit the increase to 1.5 degrees. One of the most significant risks our economy faces today relates to climate change. While these risks can no longer be ignored, they're often misunderstood and perceived to be long-term. Out of sight, out of mind. And we know that's not true. Without sufficient information, the risks cannot be accurately priced and taken into account in our business decisions. The bill aims to correct this information gap by requiring around 200 of the largest businesses participating in New Zealand's financial markets to disclose clear, comparable, and consistent information about the risks and opportunities climate change presents to their businesses. This will promote business certainty. It'll raise expectations, it'll accelerate progress and create a level playing field. These climate-related disclosures are designed to encourage entities to become more sustainable by factoring the short, medium and long-term effects of climate change into their business decisions. There are four main elements to the bill. First, it introduces a mandatory climate-related disclosures for most listed issuers, along with large registered banks, licensed insurers, and registered managers of investment schemes. Second, it requires the disclosures to be made in accordance with climate standards that will be issued by the XRB. Third, the Financial Markets Authority will be responsible for the independent monitoring and enforcement of the relevant reporting entities' compliance with the new reporting standards. And fourth, the XRB will be able to issue guidance material on environmental, social and governance reporting and other wider aspects of non-financial reporting, and that guidance will be important. In terms of the reporting standards, I want to acknowledge that there is a growing trend towards non-financial disclosures, and a number of companies already include climate-related risks and opportunities in their financial reports. And although that's encouraging, the information out there is not enough for investors, creditors, and insurance underwriters to make informed decisions about the impact of climate change on business. The disclosure regime introduced by the bill will change this. It will require reporting against standards that promote the provision of consistent, comparable, clear, and reliable information. The XRB has developed the first draft sections of these standards and is now ready to get your feedback. This early stage of development is an important time to engage with the XRB and provide suggestions and insights into how your business may best disclose its climate-related risks and opportunities, and what information you need as an investor. There were some changes to the bill following the select committee process, and I want to highlight one of the important changes recommended by the Economic Development, Science and Innovation Committee. That change is the removal of the disclose or explain provision. The original bill contained an exception for reporting entities if they reasonably determined they were not materially affected by climate change. Concerns were raised at the committee that this provision would result in substantially different reports and quality of reporting, which would undermine the disclosures regime's fundamental goal of providing consistent and comparable reporting. Any need for differential reporting can be achieved through the application of the climate standards. That ensures users are able to compare reports and that all climate reporting entities are analysing their climate risks and opportunities and doing that in a consistent manner. The disclosure regime is now mandatory for all climate reporting entities. So in conclusion, the climate-related disclosure regime is in line with the broader purpose of the Financial Markets Conduct Act 2013 to promote and facilitate the development of fair, efficient and transparent markets, and to promote the confident and informed participation of businesses, investors and consumers. The main objective is for the effects of climate change to become routinely considered in business and investment decisions. The disclosure regime will also help identify business opportunities. New Zealand businesses are well placed to seize emissions reducing opportunities in such areas as energy production, food production, and pollution reduction. There's a lot happening in this space internationally, but New Zealand is on track to be the first country in the world to pass legislation requiring all large listed companies and large financial institutions to annually report on their climate-related risks against such a robust set of standards. Becoming the first country in the world to introduce a law like this means we have an opportunity to show real leadership and pave the way for other countries to make climate-related disclosures mandatory. I'm very proud of the work we have done to get this bill to this stage and thankful to everyone who has participated in the journey so far. I want to again thank the XRB team for your hard work on developing these standards. I want to thank Minister Shaw for his work in getting this concept over the line and his support of the bill. And I actually want to thank everybody participating in this call for the work that you will be doing to ensure we have fair, transparent and efficient markets that really and meaningfully assess the value of our climate-related risks in this country. Kia ora koutou, ngā mihi nui kia koutou.
Thank you, Minister. I'd now like to introduce the Minister who has been responsible for driving this legislation forward, the Honourable James Shaw, Minister for Climate Change and Associate Minister for the Environment. Minister Shaw.
Tēnā koutou katoa, ngā mihi nui kia koutou. Good afternoon. I just wanted to start by acknowledging David. Thank you for the introduction and also for your kind words. For most people who are on the call, David's actually the one who's done all the hard work between the pair of us on this particular piece of legislation. Because in the last term of government, we got the cabinet decision that we wanted to proceed, and under the new portfolio assignments in the new government post-election, David's picked it up, and I'm delighted that he has, because he's got a real passion and he's got the intellect for this particular challenge. I also just wanted to thank April and Michelle at the XRB and the whole team at the XRB. And I know, looking at the list of participants, which is now up to 564, that there's a wide extended team who have kind of gotten us to this point as well. And I wanted to thank you all for all of that. Look, I wanted to, David's given a very kind of comprehensive view of what's in the bill and also what has changed during the course of the select committee stage. And he is the minister responsible for the legislation, so he's been tracking it in that sense. In terms of the genesis and the intent behind it, I thought I might just share with you a story, which some of you will have heard before, I'm sorry, about where this came from. And it was because, coincidentally, I was in Paris for the concluding talks at COP21 that got us the Paris Agreement. And at that stage, David and I were in opposition, so I wasn't directly involved in the negotiations. And I happened to decide to go to an event at which Mark Carney, the Governor of the Bank of England, and Michael Bloomberg, were speaking, launching the task force on climate-related financial disclosures. And neither of these gentlemen are hippies. They're pretty dry and fairly traditional in an economic sense. And yet the language that they were using really was sounding the alarm around not just climate change, because obviously in the Paris Agreement, everybody's kind of aware of that, but essentially the risk to business that business itself didn't know about. So one of the things that I remember very clearly Mark Carney saying was, in their estimation, when I say they, that the Task Force on Climate-Related Financial Disclosures, in their estimation, there are literally trillions of dollars of unquantified, undisclosed, and therefore unmanaged or unpriced risk sitting on corporate balance sheets around the world relating to climate-related risks. And those broadly fall into two categories. Some of them are, kind of physical risks, which might be if you've got assets that happen to be located close to the shoreline in a rising sea scenario, or in New Zealand, for example, where we have such a significant agricultural sector, the increasing risk from the frequency and severity of droughts that occur and increasing floods and storms and the damage that they can occur as well. So there's those kinds of risks to the business. And then the second category, broadly speaking, might be categorized as stranded asset risk. And of course, the kind of primary example, the most obvious example, but by certainly no means the only example for that, might be in the oil and gas industry, where we know that, over the course of the coming decades, we're going to have to dramatically reduce and then eventually eliminate the amount of fossil fuels that we use in our economic system. And that in many cases, some of those assets need to be taken offline in advance of their kind of general economic lifespan or their operational lifespan, and that therefore presents a risk. Of course, if you were sitting in a corporation and you became aware of the fact that there may be perhaps many millions, or depending on your size, billions of dollars of risk sitting on your balance sheet that you don't know about, that represents a material risk that your directors and your shareholders are going to want to know about. And so the intent of the bill is very much focused on directors and shareholders, fund managers, analysts, and so on, people who are involved in the allocation and pricing the allocation of capital and the pricing, the appropriate pricing of risk. And I know one of the conversations has been around the scope of who should be in this reporting regime and so on. And we do have other mechanisms that we're looking at. For example, we are going to have from 2022 compulsory reporting for public organizations. But in terms of this bill, it's very much built around ensuring that investors and directors are very, very aware of the inherent risks in the businesses that they represent and that they are shareholders in or that they help to manage, and that they are able to take action based on good information. It was telling and a bit surprising when we did our initial conversation a couple of years ago about whether or not to proceed down this path, that 86% of business submitters supported a mandatory regime, because it's not often that you would get that level of coherence in any community around anything, but to have that level of support for what might be regarded as an increased level of reporting compliance, you could say was surprising. And I think that just shows that actually there is a tremendous awareness out there in the business community that climate change does represent a material risk to business, but also that it's very difficult to be the one that goes first and kind of shows the investment community your dirty linen if your competitors aren't also doing the same. So a mandatory regime helps to level the playing field because everybody's all in, everybody can report. And as David said in his remarks, that you've got a system of comparability. So you're able to make decisions based on an apples for apples comparison. And so, this was very encouraging to us. And that is why we were prepared to be one of the countries that is, in fact, the country that is going first on this, but by certainly no means the only one. Final thing that I just wanted to say about the importance of this, particularly in relation to the pricing risk, is that it's had a lot of support from the Reserve Bank, and that there are something like 63 other central banks around the world that are looking at this. Because if you consider at an individual business level the potential risks that are contained there, if you consider the collective level of risk across your economy, then it may actually represent a risk to the financial system itself. And so central banks are starting to take a real interest in ensuring that this kind of risk is able to be disclosed, not just here in Aotearoa, but all around the world. And so I think that you will see very rapidly a number of other countries bringing in very similar regimes. So we are, David and I and the rest of the government, very proud to be first on this. And we know that there are a number of other countries, particularly the United Kingdom, who also are moving very rapidly on this, are talking to us about the regime that we're bringing in here. But we also know that we've got an opportunity here, and we do have very high standards around transparency and integrity in Aotearoa, that in developing these standards, that we're able to then start to shape what goes on in the rest of the world as well. So I just wanted to say thank you very much for your participation. I'm delighted to see so many people involved in this and on the call. And thanks again to the XRB for all of the hard work that they are putting in, bringing up a standard in time for us to get this regime underway. Nō reira, tēnā koutou, tēnā koutou, tēnā tātou katoa.
Thank you, Minister. While both ministers have been busy driving forward and enabling the legislation, the XRB has been working at pace to deliver the disclosure standards. And now I'd like to introduce April McKenzie, the Chief Executive of the XRB, to walk us through the first part of that overarching deliverable. April.
Kia ora, Michelle. Tēnā koutou katoa. Hello, everyone. I just want to mention, first of all, that at the bottom of your screens there, while the slides are coming out, there's a little Q&A. If you would like to enter any questions, please do go right ahead. We do have time for Q&A session, and we will have questions for the ministers and myself and Michelle and Amelia Sharman. So my job this afternoon is to tell you briefly about the first consultation paper being launched today. But before I do that, I would also like to add my thanks to Minister Clark and to Minister Shaw for sharing their thoughts this afternoon. And I'd also very much like to thank them also for the confidence that they have placed in the External Reporting Board, the XRB, to lead this work. The XRB is developing climate standards and guidance for use by entities in their climate reporting. But a key message that I want to leave you with today is that if you come at this as a compliance exercise, then you'll be wasting your time and your companies' and investors' money. Considering the impact of climate change on your organisation's strategy and its activities will enable better decision-making by boards, management, investors, and others. So this slide here is going to tell you a little bit about the timeframes that we're working to. As you can see, we're over here on the left on the 20th of October with the release of this first part of the consultation and our engagement journey, the first formal part. As you're aware, the TCFD, and it's been mentioned by both ministers already, on which the New Zealand standard is based, has 4 parts: governance, strategy, risk management, metrics, and targets. The consultation document that's being released today provides the draft sections for the governance piece and the risk management piece. The other 2 sections, strategy and metrics and targets, will be issued for consultation around March 2022. So we decided to start with the governance and risk management sections because these represent an important starting point for all entities on their climate journey, their thinking and their reporting. So we're aiming to issue the full ED in July 2022 with a standard in December 2022, triggering the reporting regime. So for periods commencing 1 January 2023 will be the first reporting period. So the first reports will actually turn up in 2024 under this mandatory regime. But don't wait for those dates before you get started. You need to be thinking now. You need to use this document that we're launching today to consider your governance position and your management arrangements and your processes. And I'm going to dig a little more into what we are going to issue. So the bill requires entities to comply with climate-related disclosure framework. That framework consists of 3 parts. NZCS1, which is going to have the climate-related disclosures, of which you're getting 2 parts today, and there'll be the other 2 parts in due course. They'll all go in one document. NZCS2, an adoption standard, and I'll tell you a little bit about that. And CRDC, don't you love the acronyms? We'll also be issuing guidance. Alongside those 3 mandatory standards, the XRB will issue guidance for entities that's constantly going to be updated. It'll be on the critical topics. It'll include examples, and very likely it will be sector specific. So before I dive into that two parts that have been released today of CS1, I'd like to talk a little bit about CS2, the adoption standard in CRDC. So an adoption standard offers various provisions and clauses to entities when requirements are new or being applied for the very first time, such as using easier numbers to begin with in anticipation of building systems to develop more robust information and numbers, relief from comparative information, and perhaps phased application. So we are thinking about that and how this comes about. But our current thinking in adoption provisions for governance and risk management is that there is not likely to be any relief because these are not going to be onerous disclosures. They are about what you're doing now, and so therefore should be relatively straightforward. CRDC, the disclosure concepts document, it's going to be, those of you who are familiar with the idea of an accounting conceptual framework, it'll be a bit like that. It's going to look at the qualitative characteristics, the things that we standard setters get a little buzz out of. That means that we'll be explaining what is the nature of the information that you need to be disclosing, that it's neutral, it's comparable, it's verifiable, that it's timely, that it's relevant, that it's complete, and it's free from error. There is a TCFD document issued on the fundamental principles of effective disclosure, and we'll be using that as part of our guide. So let's dig a little further into the consultation document that you're getting released out at 5:15 tonight. What you see in front of you on this slide is not the text of the standard, but the text of the full standard is inside the consultation document. Each section of disclosure has a disclosure objective. In this case, for governance, it is to enable users to understand the role both an entity's board plays in overseeing climate-related issues and the role of management plays in assessing and managing those issues. The consultation document, as you can see summarised here, sets out the information that must be included when describing the board's oversight, and then what information must be included when describing management's role in assessing and managing risk-related issues. So that's risk and opportunities in this section. In the proposed section on risk management, and I do emphasise that word proposed, there is also a disclosure objective. The disclosure objective for the risk management section is that it will enable users to understand how an entity's climate-related risks are identified, assessed, and managed, and how the processes of doing that are integrated into existing risk management processes. Emphasis on risk here. So the risk management disclosure sections are about an entity's processes. Underline the word processes for identifying, assessing, managing. The disclosure of those risks, and then also the disclosure of any opportunities an entity has, is in the strategy section, and that's going to be released in March. So the consultation document sets out what information an entity must disclose for both transition and physical risks, what information must be included to describe the processes for identifying and assessing climate-related risks, and what information has to be about the processes for managing them. Both sections, governance and risk management, and indeed so will strategy and metrics and targets, will have an explanatory paragraph. That explanatory paragraph basically says you have to do a bit of a check on yourselves. And every organisation has to consider the level of detail necessary to satisfy that objective. The disclosures underneath are not a checklist. You have to look at that objective and say, does the disclosure meet the objective? and make sure that you've got the emphasis in the right places. If those disclosures are not sufficient to meet the objective, you should disclose additional information. However, you've also then got to make sure that you don't overload your disclosures and obscure with inclusion of insignificant detail. There's much more about these sections and the whole project in the consultation document. Runs to about 40 pages. We've tried to do things a little differently here by giving you the sections up front and putting them a little bit in context of the whole project. We've dotted throughout the disclosure, the consultation document, a series of questions. Here's just 3 examples of the types of questions that we are asking. Submissions can be made in very many different forms. It doesn't have to be a formal letter, but you can submit formally if you wish through the website. You can ask questions and provide comments through various events. And I'm glad to see that people are building questions down there in the Q&A for us to discuss this afternoon. And you can also follow us on LinkedIn. Emily Martin, our head of strategic communications here at the XRB, she and I have a little bet going on that I'm going to contribute $10 to a charity for every new LinkedIn follower that I manage to get here tonight. So please sign up to LinkedIn and follow the XRB. It's a good way for you to be aware of the documents we're producing and the presentations and events that we're holding. The consultation on this is short, just 1 month, and it's due by the 22nd of November. Don't worry, you're going to get another chance at having another go around, and you will get the full exposure draft back out issued in the middle of next year. Now, before we head into the Q&A part of the event, I would just close out by encouraging everyone that's either signed up tonight and especially those who are here to stay connected and give us your feedback, the good, the bad, and the ugly. The bits you liked, the bits you didn't like, the things that you think you're going to struggle implementing. So I'd like to invite Dr. Amelia Sharman, our Director of Climate Standards, to join me for the Q&A session. We'll try and get through as many questions as possible, but if we don't get to your questions today, there is lots of opportunity to give us feedback. We are going to make sure you get plenty of time also to ask questions of Minister Clark and Minister Shaw. Ngā mihi nui. Thank you. Back to you. Over to you, Amelia.
Tēnā koutou katoa. Thank you very much, April. As April has said, we've received a lot of questions. If we don't get to your question today, rest assured we will chase up with you and try and answer your question directly. And we will be putting a lot more information on the LinkedIn posts, etc., answering these questions. So the first one is actually directed at Minister Clark. So obviously there are around 200 climate reporting entities that are in scope of this regime. But the question is, how well placed do you think that those businesses that are not the climate reporting entities, and there are many of them and they are often large, are placed to understand the impact of climate change on them and on the broader New Zealand economy?
Yeah, well, obviously it's a little bit of a piece of string question. Some will be better prepared than others. But what I would observe is that this kind of reporting, I think, is going to become more common, and investors, whether in private equity or through other vehicles, are going to demand that information is presented in an understandable, clear and comparable way. And to that end, I expect that the standards that we set for climate reporting entities will be more widely adopted and understood by investors across a different range of companies outside those that are publicly reported with time.
Thank you, Minister Clark. I've got one for Minister Shaw as well, which is asking about the international framework. So what do you expect will happen at COP26 in relation to global efforts around climate reporting?
Well, I've kind of learned not to expect anything in particular. You know, what's the Monty Python line? No one expects the Spanish Inquisition, because it's always full of surprises. However, I do know that there's been a real head of steam building up around this. Grant Robertson, our finance minister, is a member of a group of finance ministers under the UNFCCC framework, who are looking at essentially the impact of climate change on the financial system and what we can do to respond. And like I said, there are, I think at last count, 63 central banks who are looking at this, and COP is a place where a lot of those groups will come together, and those discussions will move further along. So I guess I don't have a prediction about what might come out, but it wouldn't surprise me if there were some significant announcements in this domain. I just couldn't pick them in advance.
Thank you, Minister Shaw. We've got a question, a lot of questions here, which talk specifically about alignment with the TCFD. So as we know that this regime is specific to the TCFD, the XRB has developed it with those principles, those sections. And the question is, and I'll give this one to April, is how aligned is this standard going to be to the TCFD?
Well, on a scale of 1 to 10, I'm going to put it right up there at the 10. But there's been some challenges because the TCFD framework was designed as a voluntary framework. In New Zealand, it's a mandatory framework, and we're acutely aware of the consequences to directors and entities when it becomes a mandatory regime. But we are burrowing through the thousands and thousands of pages of TCFD material. We are drawing off that very high level 11 disclosures and building down, looking for what's a must disclose. And then in guidance, I think we will provide examples that draw off the TCFD material as well. Amelia, do you mind if I mention the ISSB as well, the International Sustainability Standards Board? That's being hopefully launched at COP26. We're expecting some announcements on this new board that's being set up by the International Financial Reporting Standards Foundation, the same group of organisation that oversees the International Accounting Standards Board. And I know people are interested in hearing about how we're aligning with that. We have started talking to the group that's building their exposure draft, and we are following closely what they are doing. We believe, though, there will be only so far that the international standard will be able to develop disclosures, and then there will be some that will need to be unique to New Zealand to reflect our situation. Thanks, Amelia. It may or may not have addressed the questions if there are others.
Sure. Actually, and we have another question for April on assurance. So there's a question, will there be a need for the information disclosed to be independently assured and audited?
Oh, well, I know that Minister Clark and Minister Shaw can also answer that because that answer is yes, although the regime did change, as Minister Clark mentioned, between the original bill and the one that came through the Select Committee. In the first instance, the assurance will be mandatory over the GHG disclosures, but in the XRB will issue standards for assurance practitioners in that area, drawing on various international sources for that. There is likely to be expansion of that regime. Minister Clark, I don't know the extent.
Yeah, so I think, you know, I'd observe that those there's a degree to which they're voluntary to start with effectively. People can opt into them, and we will look again at the assurance regime further down the track. This is a new area. Everybody will be getting used to how this rolls out, and I expect a lot of expertise will be developed over the period. The idea is not to be punitive in the first instance, and quite a lot of the changes coming out of Select Committee are around being more permissive in terms of developing reporting and making sure that reporting's timely and so on. The aim is to build up the workforce of those who are qualified and able to do assurance appropriately, so that when the time comes, we can look again at whether those will become something with a broader oversight regime.
Thank you, April and Minister Clark. We have had a really good question, which is asking about risks from a New Zealand and an international context. So the question is, should disclosures be just about a New Zealand entity's climate risks and opportunities, or what about risks in other locations? Does anyone in the panel want to answer that specifically?
Well, I think there are two parts to that question, Amelia, and you might want to speak to part of it. The piece that I would first tackle is who's the reporting entity, and the legislation is quite clear, or the proposed the bill is quite clear about it being a report on a New Zealand business. So if it's a branch of a New Zealand, or a branch of an overseas or a subsidiary overseas company, there's going to be a requirement for a climate statement that speaks to the New Zealand aspects of that business. But of course, as a New Zealand business, if you're being impacted by climate change issues in other jurisdictions, because they're impacting on your supply chain, or they or other such factors, then of course you would include those in your disclosures. That's how I've understood the question.
Yeah, absolutely. I think the only thing I would add is everyone knows that the scope 1, 2, and 3 emissions absolutely for most entities will extend beyond national borders. So it is a question that we are looking at very closely. The brand new TCFD guidance that came out last week has gone a bit stronger on scope 3 emissions, and that is something that we will be consulting on in March 2022. We've had a lot of questions about scenarios. So that's not a part of this consultation that's coming out in March 2022, but to open to both ministers, is there going to be, what are your thoughts on encouraging sectors to collectively develop reference scenarios together, or enabling access to data so that entities can do that either at a national level or individually?
Do you want to have a go, David? Or
look, I mean, I was going to hand this one to the XRB, to be honest. I think their question's a genuine one. There's still some work to be done on what the right scenarios are. I think obviously one of those scenarios has to be, looking at the IPCC work and looking at what the current track is globally, and imagining how that plays out. So we need to have some clearly scientific basis to the scenarios. And we're going to have to develop those alongside understandings of how the world is responding. So James, it's probably actually more your area, to be fair, in terms of overall climate change policy, in terms of understanding those scenarios. But we will be tasking the XRB with leading that standards work, and we'll, interested, I guess, in the chat, we'll have a range of views about perhaps how those scenarios should be shaped. But it's further down the work program, but it's of course something that is forefront of people's mind right now, and want to acknowledge that.
Yeah, look, it won't surprise you to learn this is not the first forum that this question's come up. And we've had a very strong steer in the advice that we got from the Climate Change Commission back in May about some of the data sets that we need to kind of bring together and make much more easily available to communities, iwi, business, etc. And that in an ideal world, people would be operating off essentially a single reference point. And that kind of helps with the apples for apples comparison, because you're then building your own assessment of your risk against a base case that everybody else is also building their own assessments from. We obviously don't have that in place at the moment. A really sophisticated model would include probably a number of public data sets, but actually also some private privately held data sets as well, if we can work out a way to integrate those in a commercially sensitive, anonymized manner. And, for example, information that the insurance industry has available to it, for example. And I think if we can do that, that will be a tremendously powerful tool, not just for reporting entities under this regime, but for local authorities, property developers, essentially kind of just about anybody who's making any sort of forward planning or investment decision in the country. So we haven't made any decisions on that yet, but we do have, shall we say, we've been given our marching orders.
Thank you, ministers. And I'm aware we're at 5:15, but I'm going to sneak in one last question. We've had over 50 questions, so thank you very much, everybody, for your interest. The last question is, do you expect, to Minister Clark, alignment between XRB standards and the expectations that prudential regulators have of disclosing entities to report their climate exposure for solvency purposes? Oh, you're on.
Sorry, I just want to make sure I understand the question right. I wonder whether XRB might offer their thoughts in the first instance. I've just got advisors in the office chipping something in my ear I can't quite follow. So let me pick that up while you give your...
Certainly, Minister Clark. I think they're going to be aligned. Certainly the XRB is making every effort to stay close to the work that the RBNZ is undertaking. We've also been in discussion with the Australian APRA, and we've found that they've been very open to talk to us about their projects, and we too have been sharing with them the nature of the work that we are doing, because certainly there are many different aspects of disclosure requirements coming up all over the show for all sorts of entities. And I think it's very important, to the extent where one piece of information can be used multiple times, that's a win-win, as long as it's fit for its particular purpose. So I think the answer to the question is we're certainly doing our bit, and we're working closely with the RBNZ to make sure that where we can align, we will be aligned. But of course, it's for a different purpose. So they may have some things in addition that they want over and above what we'll have disclosed. And I can't speak to that part.
Yeah, and I won't say anything further because it actually sits in the Minister of Finance's bailiwick to make that final call. But thank you, April. I think that's helpful.
Thank you, everyone. Thank you very much for all your questions. We're delighted to see the interest. We're really hoping you read the consultation document and get back to us with your thoughts. And I just hand over to Michelle Embling to close the session.
Thanks, Amelia. As we close out, I'd like to extend my thanks again to Minister Clark and Minister Shaw for joining us to mark this launch. I'd like to acknowledge the leadership of April and Amelia and the hard work of the XRB staff team over the last 9 months, and extend my thanks also to the expert advisory panel for their sound advice, and the project steering group and the XRB board for their ambition and support. I encourage all of you to share your views on what we have developed to make sure that this standard is the best that it can be for Aotearoa New Zealand. E hara takatoa I te toa tahi tahi, engare ho toa taki tini. Success is not the work of one, but the work of many. Mā te wā.